Here for Am I Rich, and today we're talking about KB Homes. Yes, I know I've already talked about KB Homes, but this is a bit of an update because they just released some earnings reports. So yes, I'm doing KB Homes, and don't worry, I'll be doing other stocks in the future, or feel free to browse my channel later on because I'll still talk about the banana industry or something else about that. So yes, for those of you who don't know, KB Homes is under the ticker symbol KBH. It is a company that builds houses, and they basically buy properties, lots of plots of land, and build communities around the United States. And just like any home builder, it's a fairly straightforward business to understand. And with economy of scale, they basically target the average house price mostly, some upper scale, some around here and there, but that's what they target. But the economy of scale gives them a better return on their revenues. So yeah, so because they've just announced their earnings, they did have a bump in their stock price after hours. It's up at $24.65. Since my last video, it is up about 8%, I think, since I mentioned. And I did talk that I thought it would probably go up in the next 3 months or less, but after that I wasn't sure. So I thought I'd kind of clarify that now that they just did their earnings. So let's do the stats quickly. It has a PE ratio of 8.5, which is really cheap for the average company. So when you're looking at the average company, they're usually between 18 and 22 for a PE, price to earnings ratio, and 8.5 means it's very cheap. Even if all seniors sold all their stocks, then the average PE ratio of the market might go down to around 8. So still, the worst case scenario is probably a fair value if the company's financials are stable. Its forward PE ratio is expected to be in a range of between 8 and 11.4, so that kind of gives it a mild growth, probably a flattening, and a little bit bigger chance of it actually declining just slightly in its growth of earnings. Now the price to book ratio is 1.1. Again, this is very cheap. This is almost buying all its assets for the price that they're actually estimated as their value. Plus you'd get the earnings from the business. So a 1.1 ratio is very cheap, but pardon me, but is this reasonable or not? That's the question. Anyways, the dividend, 0.1%, nothing to be excited about. And the 5-year growth rate has increased since their last earnings. So it's currently at 40.5% annually, which is one reason why I think this stock, it's been growing very fast, and I don't know that the stock price has kept up with it. So I think this might be an interesting buy. I personally see it as a spec stock, but yeah, that's my kind of thoughts. Now, the reason I think it did go up is because its earnings beat the average consensus earnings estimate. So I think they had an estimated range of between 0.21 and 0.34 cents or dollars, I guess, per share, and they came in at 31 cents per share, which was above the average of 26 cents. So they did beat it. They didn't go past the high end. So this basically suggests that people's view of the housing slowdown is probably not as bad as they thought. That's at least one potential takeaway from it. Now, don't get me wrong. They also mentioned that yes, housing, their orders have gone down, their backlogs have gone down slightly. They had less revenue, but it hasn't been as bad as expected. So that's one good thing about this company. So because of that, does it change my thesis on this company? I don't know that it does. So I still see it as quite cheap. Now, the difference is, I guess, if you were to look at it from a point of view in the past, how bad could it get? And you could see, is it too risky? Well, so in the positive case scenario is people still have jobs. The unemployment rate is very low in the United States. The economy is still chugging along, even though there might be the world looming of a slowdown. But the slowdown might not be as bad as people expect. Even a lot of economists are not expecting it to be that bad, just a slight slowdown compared to normal. And also the housing market crash might not be as bad if it did slow down. They might just have a stagnant growth in housing, as opposed to something like in 2006 where housing just crashed completely. And in those cases, I mean, it's also, if you look at history, people usually can't predict the next crash because it doesn't repeat itself very often. So in that case, it's hard to imagine the exact same housing bubble happen as it did last time. So if they do have a slowdown, it's probably not going to crash as bad as it did in the past. So these are all kind of semi-positive news for this company. So basically, I think it might be overblown the downside to this stock. Its growth has been so good that I think its stock is quite cheap for what it should be. And so that's one reason why I think it's probably a decent return on this stock if all goes well. So that would be the positive case scenario. The negative side, well, you have to look at, what if there was a huge housing crash? How bad could it get? Or what if 3D printed homes come out? Will that take away their market advantage? Pardon me. All right, so let's get into the numbers. If they did have a housing crash, well, what happened in 2006? In 2006, basically, when housing crashed because everything was overextended. People were getting mortgages for way too cheap, and they were just buying bigger houses even though they couldn't afford them. And so they started to have to foreclose on houses, and that basically cut off most of the demand for new housing for KB Homes. So in that case scenario, their assets went down in value by about 30, maybe 35%. So that would give a price to book ratio, instead of 1.1, it might go up to like 1.8, which actually isn't that bad, but it's not great, I guess. It's just kind of average. But the real bad part would be the price to earnings ratio. The earnings could go negative. And so that is the real, scary part about this stock. And its growth rate is expected to slow down, so 40% might be a thing of the past, but they've been able to show how they've improved their margins on their business. Whether people like, their homes more or not, they still might complain about their homes, but they've managed to eke out more profit out of their housing, so they might have found a nice sweet spot for their business. And that's kind of the downside main downside that I see. And as far as this stock, it just went up, and so I don't know, like every time you do an earnings report or some major news happens, the investment kind of mindset might shift for a company. So because of the potential downside to housing, I don't know that this stock's going to continue to go up. It did go up 8% since I mentioned it in the last video, but now that their earnings, and it did jump up, from their earnings, so I do see it as potentially cheap. Worst case scenario, it's not a horrible buy, but you just like last housing crash, you might have to hang on to it for 10 years to make your money out of it. So it might not be the best thing to do, invest in this. But I'd love to know your thoughts. What do you guys think? Do you think KB Homes this is the time to buy? Because it does seem cheap if housing stays stable, or if the housing crash or slowdown is not as bad as expected. But otherwise, it's a little bit too risky for me, so I would just consider it a hold, or not a buy. But I do see it as a very good potential buy if people are confident in the market. So what do you guys think? Is there blood in the streets? Is it time to buy? Or is this just, way too risky for you? Let me know in the comments. Otherwise, thanks for watching, and we'll talk to you in the next video.